Good morning, folks. How are you? So it is 25 minutes after 8 a.m. Eastern Time. It is Friday. Thank God it's Friday. The market review I want to do real quick here, so that way it's out of the way and we can focus on live price action during the normal stream, which will start at 25 minutes after 9. Okay, so I'll just breeze through this real quick. First, looking at micro NASDAQ. And for the folks that are questioning, why am I looking at the NASDAQ through the micro, not mini? This year, again, I've been focusing on teaching how brand new students should be watching price action and not chase all that stuff you see on the internet where they got 500 contracts of the minis, no stop loss, and they're trading 50 different linked accounts. I'm trying to I'm trying to stay in my own lane and say, listen, let's be practical about this in the beginning. So obviously, I can trade minis, but for someone that's brand new, that's not advised because the volatility. Look, I mean, look look at this. This is violent. Okay, if you notice, I have it set toggled on. That's toggled off. Okay, so we're way above these highs here. So we're focusing on this. Right. This is where I got the target I gave live yesterday before it happened. During the trader roundup, that was after my live stream, around 11:41, 11:40 a.m. You can actually verify that with Kit during the stream. He said we got about 20 minutes left because I had a hard extraction time at noon yesterday. And then shortly after he made that statement, I said that we want to be watching 26,562 three quarters. And I'm just gonna tell you that high right there, that's that price. Okay. And yesterday's daily high was that price to the tick. Mr. Market Makers, Mr. CNBC guys, to the tick. So anyway, uh, buy side has obviously been engaged this morning. It is Friday, so we have a wild card here today. So it could be a day where we leave this high, which I think is the next objective. Okay, so this October 30th of 2025, that's the high that I think we're going to aim for next. So that's 26,859 even. But if by chance, you know, we get some tweets that give us some sugar rush, it could easily snap up there and do a couple hundred handles today and get that. So I don't feel comfortable going out and saying it's TGIF 20-30% return in the weekly range. In other words, if you don't know what that is, look at my video on the YouTube channel, TGIF. Okay. I don't want to step out here and say that that's likely to happen because I don't want to stand in front of this freight train. Okay. If you watch the streams back here before I went on vacation, I told you that once we got down to our targets, it could start to turn and then aggressively run back to take out these highs, the all time highs. And we were looking at it through that chart. Okay. And go back and listen to the streams ahead of this turn. And this is exactly what we got. Okay. So your market makers aren't going to tell you that, but some small retail guy just did. So let's breeze on over to MES real quick. So we smashed all-time highs there, and we'll toggle on and off. Or you can see we've done both cases. So this index is a little bit more weightier than Nasdaq. It's 500 issues or companies that make it up. And let's now look at Dow. I had a request for a little bit more detail about Dow. Dow is your next target is here, okay, and it could hit that either today or Monday. This hooker does whatever she wants to do, and she's for whatever reason um, permitted to just do things by herself. So the next block she's going to be working is right here. No pun intended. The all-time high may require a little bit more time to get to that. but I do suspect that it'll eventually get there. It'll probably join this with the NASDAQ. So Dow might get accelerated and start outperforming on an intraday basis in the coming days to get to that target. So just be mindful of that. This wick here, just for the sake of folks that are Dow traders, you like hanging with the floozies, the opening price is the high of that wick. Okay. I teach that these wicks are gaps. And the way I trade gaps is I measure their sensitivity, discount sensitivity, premium sensitivity. Premium sensitivity is where we stay in the lower half when bearish. Discount sensitivity is when we stay in the upper half and stay out of the lower half of whatever the PD array or gap or wick is. So when price traded above it here, that opening price is the high of that wick. So look at it like this. Think of this as like a fair value gap. Okay. So what's it doing? It's trading right down to the top of it. You won't find that in anybody else's logic. Okay. You're welcome. So the bottom line is it trades down there and then starts to capitalize and starts running higher. Inefficiency to the left is here. So we'll be watching that as a draw on liquidity. So you can just eyeball it. Use the high of that candlestick, Michael. Make it easy. 49,439. That's the next upside objective for Dow. As long as this low stays in place here, Dow stays higher, looking for this and eventually the all-time high. MNQ, let's go back to that one. All right, so we have an opportunity to employ my event horizon. So here's where we go into using two pools of liquidity. We have the all-time high here, and we have this high here, which we were targeting yesterday and was the actual daily high to the tick. So you can take the high here and drop it on that high there. We don't need any of the standard deviations. We just want the half point, 0.5, okay? So 26,711. That's the time I was born, 711. That's interesting. So that's our next objective intraday today. And upside, that's what I'm looking for. It doesn't mean it can't go to that and through it, because I said Friday, we could see a retracement back down in and take out this morning's low. I'm not trying to predict an outright reversal. They're doing quantitative easing again. They're printing money. That's always going to shove the market higher, and they're in a hurry. Okay, so they've already cleared this out. This may require next week, but it's on the table. It's still today, but we still have to meet in the middle. So how we trade to consequent encroachment is indicative of when and how we trade to that high right there. So long story short, we want to see if it can gravitate towards this today. If it goes through it and starts treating it as discount sensitivity, in other words, think of it as going above it, coming back down in, and a real support level would materialize in this level. And then if it starts to run, then this could very well be done before the close of the week. Um, this is also a scenario where, because it's Friday, this is one of those things where they kind of like prevent you from getting the actual run. So what I mean by that is, excuse me, is that it can run up here and get real close to taking that level and then close on the regular trading hours. But during electronic trading hours, they send it through it. So that's something on my radar today. I'm not trying to do a hard sell on that scenario, but just given the way things have been going the last few months, I just suspect that that's the tomfoolery that could materialize, and you wouldn't be able to participate in that if you're forced out of the move because of regular trading hours. Okay, so during electronic trading hours, that move might be the only way you participate in it. So it's just something to consider. Just watch it. I might be wrong. Okay, I might be wrong, and just study it. So now with these levels in mind and on the chart, we're going to drop back down into a 1 minute time frame. Look at that mess. We'll come back to it in a second. So let's scrub on over here. I like that right there, by the way. So let me annotate that. Hopped in a student's live stream this morning, and I think I discombobulated her, so I had to leave. I just want to say hi and good morning and hang out with folks, but I end up disrupting their flow, and it's cute seeing it, but I had to leave, Claudia. So don't think I was being rude. But he only watches the women live streamers. That's not true. That's not true. But you men sometimes get all bent out of shape because I'm supporting the female students. You're simping. You're simping, bro. So anyway, if you watched the live stream yesterday, and which I'm having a lot of fun priming everybody with these things, by the way. We'll get to that in a minute. So we have the pre-session buy side and balance, sell side efficiency, which you saw in the chart. You saw me annotate. You saw me mention it. Um, the market utilized that in here, and then while we were in here, I used the wick. Told you that once we get below consequent encroachment of that, it would start to get heavy. It would need to start dropping off, going lower. It went to our objectives on the sell side, which I don't have in my chart. I don't know where they went. They should have been up in here and in here, but whatever. This is where we separate the market makers and the dealers and the talkers and the shit talkers and walkers. I walk it out. I'm out here in the live stream. I'm telling you what everybody else doesn't know. And you're welcome to argue the case all you want. You can make all your live streams, you can make all your videos and talk all the bullshit you want, but doesn't change the fact that the old man said this is what we were looking for and we got it. Okay. Time distortion, drop lower. I said we want to see it trade to regular trading hours low. Um, the first part of the day, the morning session during the opening range, which is what I'm focusing on. I'm not trying to give the entire daily range, but when it's salient, when it's useful information, I will give it to you. Okay. And that was the case yesterday. We were looking for it to run down to regular trading hours, opening range gap, consequent encroachment first from opening. And it was a pretty quick movement lower. So I wasn't able to put anything on during that first 1 minute candle. I tried to put a short on, and trading view lagged like crazy. So unfortunately, today's live stream, I'm just going to have to call the stuff out because the optics on it looks terrible. But you can see the market's behaving the way I'm looking for it. So to keep my focus intact and not letting their substandard performance on their platform disorient me, I'm going to just call out what I think I would do otherwise. In other words, it would say, here's what I would enter at. This would be my limit order. This is where I would mark it in at. And this is where my stop loss would be. And this is where my first partial would be if there was going to be one, and then where my term is. Okay. That's what we're going to have to do because that's just the way it's going to be. And if that's not good enough, just go watch the guys that say that there's no algorithm and market makers don't go for your stop. So we're looking for the relative, um, not relative, the regular trading hours opening range gap low. This was previous day. So yesterday was Thursday. So that would be Wednesday's 4:14 p.m. Eastern times settlement price with regular trading hours. That's what this price is. Okay. And you'll see it like this. Watch. That's what that is right there. Okay. And then when we opened at 9:30 yesterday, that's your high. So that's the regular trading hours opening range gap high, regular trading hours opening range gap low. Okay. Consequent encroachment is here. 70% chance it's going to go to that by 10 o'clock. It did it in the first 1 minute candle. And then what I was stating to you all as viewers of the stream, I said, I want to see it drop down to previous regular trading hour settlement price, which is the low of regular trading hours opening range gap. Okay. But not just go there and stop. I stated when we were up here, I need to see it trade down there and it's to it, then through it. Okay. Now watch, Mr. Market Maker. Mr. Market Maker. Okay. Pay attention to this. If we are looking at that opening range, you market profile guys too, check this out. When we're looking at price and we're anticipating an exploration outside of the opening range gap, while underlying market is bullish. This is the part where you write shit down, folks, okay? Because if you don't record this stuff, you'll swear that I taught something new if you buy my book. Don't buy my books. I'm teaching everything for free, okay? But you'll see it in the book. But because you didn't take notes, because you didn't listen, because it didn't make sense to you at the time, because you're looking for something else, or you'll watch the video later on and swear I edited and added it to it, okay? But we're live streaming, so that can't happen. When there's an exploration below the opening range gap, and that's this level here, from this price point here to this level. This low is Wednesday's 4:14 p.m. Eastern Time settlement price for regular trading hours. Since we opened at 9 o'clock, the high of the gap is the 9:30 opening price. If we're looking for longer term higher prices, and that's where we're at, we're looking for all-time highs, it can explore below that opening range gap and go to a standard deviation of negative 0.5. And I mapped this out before we went down there. Now, the market overshot it a little bit, okay, and then started running back towards the opening range gap low, which I called for. And then I said, then it could trade to consequent encroachment of the opening range gap. Then it did that. It also touched that low of that pre-session fair value gap. Why did I pick this one? Well, if you look at what price was doing in here before we went into the opening range at 9:30, go back through this range, and where is a very prominent fair value gap? You have two of them. You have this one, and you have this one. Both of them were used during the price action. Here, here, here. And then eventually, once we made the low of the day, which is probably random, at some level you're never going to fucking find in anybody else's stuff. I don't care who it is. Okay. You're never going to see it. This was 1997 ICT. Okay. 1997. That's when I coined all this shit. So there's no books before this, and nothing came after until I started teaching it recently. So the market rallied up, went to consequent encroachment, and then while we were doing Trader Roundup, we were talking about things, that were pertaining to what was covered in the stream and other people's observations and whatnot. And the market was just gyrating around. Look at the bodies in here. And Benjamin, this is where you got hurt. They wicked it down in here, but the full mini contract didn't do that. But look at the bodies, okay? They stayed inside that pre-session fair value gap right there, okay? So this is time distortion, same thing. So if this is time distortion, you go up one time frame, go up to your 5-minute chart, go up to your 10-minute chart, and you'll see everything that pertains to this whole price action right there. But the bodies are telling you everything. The wicks are allowed to do the damage, and sometimes that hurts, I know. But here, the bodies are saying, no, we're staying inside what was already established as real order flow. No level 2 stuff, no Mickey Mouse bullshit, no concepts, no software programs to buy, no liquidity maps, heat maps, nothing. Just simply looking at the time and then looking at the open, high, low, and close. Okay. So we were in accumulation during this time distortion, and the market then leaves and trades up to 9:30 opening price, which I told you that was likely to pull back into. And then we had a minor buy side above that, and then the market rallied up. By the way, also, uh, I had a event horizon level annotated, and for the life of me, just watch the stream. You'll see it. I don't want to make this longer than it needs to be. Everything was in the stream yesterday. So we traded up to opening price, and then look at the bodies respecting 9:30 opening price. Okay, that's algorithmic. This is not buying and selling pressure, dude. Okay, it's not. This is rigging. Okay, this is control of price. There is no dealer, because that's what market makers. You hear the word market maker outside of my community, you're listening to someone talk about or refer to themselves as an actual dealer, not a market maker. Not every price comes from their hand. Okay, if the price starts to run higher, that supposed market maker, okay, that's supposed to just look for their delta neutral position, or not lose money but afford and provide liquidity to other things, and or have a small little marginal profit, and that's their their whole game plan. That's their book they're running. That's not what I'm fucking talking about. Okay. All of you out there think that market makers, that people get on the CNBC or they worked on the floor, they did. That's not market making. When the real market starts running, they have to engage with price action wherever that price is going. They're not making that price go higher. They're dealing in that range. Okay. They're dealing it just like you and I, where we're trading in that. We're all part of that liquidity, but they have no control over where that price is going. So the Tom, Dick, and Harry, okay, the Bobbsey twins, they can say what the fuck they want to say, but I'm out here explaining it live, 4K, telling you what the fuck's really going on because the market are absolutely AI, autonomously driven, algorithmically. Your buying selling pressure is a myth. Your bullshit talking about how market makers don't go for your stops. No, dealers take whatever they can take. Okay, whatever liquidity is coming in, whatever buy orders and sell orders are coming in, they'll pair up their orders and that's fine. But that's not what market making I'm talking about. Market making is the algorithm that delivers price. It's pushing higher because it wants to go higher. It doesn't matter how many people are shorting or buying it. You're seeing it happen right now on the daily fucking chart. It's ripping people's heads clean off their shoulders. Anybody that wants to be a bear, their lunch is what they are. Okay. So when you start seeing these candlestick bodies reflecting around the times I'm telling you to look at, this is accumulation. It runs higher, creates a small little gap there at an old pool of liquidity. It trades down to it here with a fair value gap, then rallies higher, and it goes up to some absolutely random level. Like it's unbelievably, it's completely hidden from everybody. There's no way that 26,562.75 to the fucking tick, no one could have known that yesterday. No one. No one. What's the high of that? 26,562.75. You don't see anybody else talking about that. You don't see anything else but the truth coming from me. Okay. It's in live stream, folks. It's not cherry picked. And then look at the reaction off of that. All the way back down to regular trading hours, opening range, gap high, or 9:30 opening price. Okay. Um, what's below that? Stops. The algorithm ran all the way back down for that right there, but they don't run your stops. It's a myth. So next time you want to listen to these fucking clowns, okay, that tell you that there is no algorithm, that there is no way to predict the daily high and low because if someone could do it, if ICT could do it, he would fucking do it. Well, we have a lawyer in our community that takes very, very good notes. And she documented it. She was there in the presence of the live stream. She was there during the Trader Roundup live. Kit gave the timestamp 20 minutes before noon because I had a hard extraction time. And then right after that, I tell you 26,562.75. That's your next upside target. And nothing was quoted higher. And then I came back in right in here. And I said, what's the daily high? Question mark. I wanted all of you to notice it because I did what all you fucking goobers that literally sit out here in your little circle jerks and other communities. ICT's losing. He just got stopped out. You're buying all the bait. You have no idea. I literally mapped the entire fucking daily range in front of all you, and you didn't even see it coming. But you won't talk about that. That's what's funny. I pinned the comment. I pinned the comment. Join it. Join the bandwagon. The comment section's open, motherfuckers. Let's have it because I am going to destroy all your myths this year. All these people that wear that tag, market maker, come at me because I'm out here fucking doing it. I'm out here doing it to the fucking tick. I could stand in a courtroom just like this and do it in front of a jury, in front of the grand jury, in front of the CFTC, in front of the SEC. I could do all that fucking shit. I'm right here for free doing it. I'm gaining nothing except for a community that maybe sees something that's valuable. What am I here to gain? I'm not selling you anything. But yet this shit still keeps happening. Why is that? Because it's fucking rigged, folks. It's rigged. And that should be a good feeling. You should be fucking happy that it is. Because if it wasn't rigged, nobody would know what the fuck was going on. It would be all guesswork. It would be all guesswork. Now, the daily low, I'm off by a little bit. That's okay given the volatility in the current market conditions. That's normal. That would be reasonable to anticipate that. But when everybody says in the past, ICT doesn't really call the daily high. He doesn't do that. Because if he did, he would do it. I've done it many other times. I've done it in Forex. I've done it in commodities. I've done it in futures for currency trading. I did it in bonds. I did it in the energy markets. Then we segued into just index futures. And you watch me do it here. Folks, I want you to understand something, okay? And we're going to close the string. So I have to get ready. I got to go read some books on market profiles. So that way I know what I'm doing tomorrow. Oh, man. 3 to 400 billion with a B, bitch. Okay. 3 to 400 billion fucking dollars run through the CME markets. Okay. The Chicago Mercantile Exchange products. Okay. NASDAQ. Okay. S&P, the Dow. Tell me, tell me, just to be honest. Okay. Tell me, what's the fucking chances some old dude, okay, some old dude that sits out here and demo balls and teaches you stuff, what's the chances of that same old dude being able to tell you the daily low and the daily fucking high of a 300 to 400 billion fucking dollars a day market move? How's that possible? How the fuck is that fucking possible? Tell me, because that's the question of the fucking day. Okay, you all have that same riddle to solve. Who the fuck is who? Who's who? You tell me. You gonna believe the people out there that say there is no algorithm, there's no way out there that this guy can call the daily high and the low. He can't explain it with logic. He can't teach it. It's always cherry picked. He's using 50 fucking examples. He's deleting the losing trades. He's only showing you the winning ones. Come on now. I'm having a lot of fucking fun in these live streams because I'm letting it's all happening outside of my stuff, but they're not coming to me on X. They're not dropping it in my video comment section, but they're in other people's stuff. Oh, ha, ha, yeah, look at him, look at talk about this fucking high and low, dude. Do that. You're tap dancing around it. And that's what's frustrating to me because you're literally looking at evidence. If it was in courtroom proceeding, it's unfucking deniable. It's undeniable. This shit is rigged to the tits. But you want to deny it because you don't like the person that's told you. That's what it is. And that's fine. That's cool. I'm not here for friends. I'm not here for friends, baby. I'm here to show everybody else you're all fucking wrong.